Watches is not a considered purchase. It's an impulse purchase. You like it, you got to have it. The rational part is only the relationship. If you have a good relationship with your customer, you can talk to them on one-on-one basis rather than a salesperson versus a buyer. That's where the difference is. So you got to be knowledgeable, you got to be having an empathy, and you should be able to talk to them with an equal respect. Then only a relationship will be made and you'll see the difference. But in our case, in the luxury market, we are the second player getting into the listing. We are a small SME, as the category is called. But my message to you is the time is right. Get on with it.
Hi everyone, welcome to Sunday Investing. This is episode 23 of the Know Your Promoter series, where we talk to promoters of companies which are bringing their IPO and try and understand from them the business model of the company and the vision behind bringing the IPO. Today we have with us Mr. Ashok Goel, who is the promoter and chairman and MD for Luxury Time Limited, the IPO for which is opening from 4th of December to 8th of December. Welcome Ashok ji to the show.
Thank you. Thank you for your time uh, and thank you for joining us today. And I would like to not only thank my stars, but also thank all the previous my bosses, my associates who put me in this space where I could make a contribution to the watch industry. It started long back in 1998, 1999, when it was very unorganized industry, and government duties also were very high, and the policies were not at all friendly. I mean, that's the closest thing that you can say about. But uh, from an advertising person shifting to how luxury marketing is done, that was a very different experience. That's what propelled me to start my own company. And finally, I started Luxury Time in 2008. And of course, my previous brands, they started coming in because I had the experience. I The difference over here from a traditional distribution versus me would be hardcore brand person, experience in the way how Swiss brands function, knowing ground up from the salesperson's mindset to the retailer's mindset to the brand's mindset to how the industry functions and government policies. That's what we bring on the table. So, in a nutshell, I will not bore you. When LVMH, they had an Indian subsidiary. When LVMH decided to close down their operations in India in 2015, they chose us as a partner to continue with the brand distribution in India so that there's no disruption. And we did that by cleaning the market. And now we are here for further expansion. And of course, that's where I am with you to show that it will be a good partnership.
Understood, sir. Thank you so much for setting it up. And maybe can you just walk us through our to our audience also how the watch industry works? What were you doing before, let's say 2000 since 2008 to 2025 is a long time. So, like, how have your journey evolved over a period of time? So that would be helpful if you can give us some more color on
Of
that.
course, of course. See, watches. Watches is something which what we call traditionally as it's a jewelry piece for a man, of course, and of course a woman as well, because they are growing and they are coming up and they love their watches. So, but still, the ratio is between 65-35. 65% is men, and that's why you see more manly and watches for the men. However, the point is different. The point is that how we have been able to change and make a mark in this industry. So I was, as a brand person and consultant, I launched various brands in India, relaunched brands in India, then also associated with a company which is now listed, and so worked with them to establish in India. And they are my partners today also, and my customers, my client as well. So we go ahead with like that, and that's where I learned it closely, hands on each and every process, each and every system, and which has been created so as to benefit from the ecosystem. Now, to answer your question, what we have been doing, we have been doing cleaning up. We are the cleaners in the market. When we took over Tag Heuer in India in 2016, it had 129 stores in India. Our job was to clean up and partner with the most important ones where the brand is well represented, the brand is well presented, people are trained, people are interested, and it gives a return on money from their investment. So that means it's an ROI brand for them. If they make profit, I make profit, and we have been making profit since the day one.
Understood, sir. That's helpful. Maybe I'll just go back a step and ask you a follow-up question since you said that your boss is also your customer as well as competition right now, where ex-boss per se. Would it be fair to say that the industry is fairly small? And is there a reason for the entry barrier to be slightly high? Why can't, let's say, I decide to go and open my Swiss watch distribution business tomorrow? What would be my entry barrier like?
Okay. It is fairly, the market is very, very, I would say that we like to work with people who we know. So it is controlled. But at the same time, it is not true that outsiders cannot enter. Entry barriers may be high because the initial investment is high. But more than the investment, more than the intent, it is much more of how you want to deliver the experience. Because customers today who buy these expensive piece of jewelry, expensive piece of accessory, they need to be pampered. They need to be delivered the product in much more informative way. Storytelling is there. They need to be able to experience the luxury zone. That delivery, that delivery examples need to be set by those people. It's not
Maybe.
that there are entry barriers. Like it's like any other business. You need
Understood,
to
sir.
be
So
compatible
maybe
with
there's a
with the
lot of
business.
specific knowledge which needs to be picked up while serving that industry because watch industry would be very different than other industries is what how like you think would be the right way to.
Actually, no. Actually, no. No, Manish. Watch industry is different because the knowledge is not there so much. But if you were to see the processes, it's exactly the same. There is a product, there is a display, there is a training. People need to present it. People need to transfer that initiative from salesperson to the customer. Customer has to be pampered and happy with his purchase. So therefore, there has to be after sales service support, there has to be follow-ups, etc., etc. So it's the same thing. It's very different. It's different from the perspective that people are not so much knowledgeable about it. Like for instance, you might be knowing much more about your car that you drive as compared to the watch you're wearing.
Understood. No, completely. Thank you for correcting me on that. And I see a lot of trend towards luxury watches. Watches as a segment has been exploding. So I'm sure there would be more awareness which would come in. And maybe on that note, can you just explain to our viewers right now what luxury time does? What all brands are you an exclusive distributor? Let's say I buy a tag Heuer from my shopper stop city. Would it be fair to assume that it would probably be distributed by luxury time?
Let me answer your question. Uh, First of all, we don't supply to Shop or Stop. They are not our clients.
Okay.
And but yes, any product, any Tag Heuer product that you see in India would have been supplied by us. So we are exclusive distributor for Tag Heuer. We are exclusive distributor for Zenith. We are exclusive distributor for Bomberg as well as Exacquo, which are the new brands that we are promoting in India because we feel the time is right for customers to see and experience very differentiated form and products. So we are doing that. We also have uh, two retail stores, which are mono-brand boutiques, one in Mumbai, one in Bangalore, both in luxury malls. And that is in a joint venture with my associate, my partner. And that's what I was saying that the person, the organization that I worked with in setting up initially is also my partner today, and also one of the largest retailer for Tag Heuer. So he's my client as well.
Understood, sir. Helps in order to complete the journey. Maybe can you also help us explain to us what all are the revenue segments for the company right now? Like how much of it is from traditional B2B distribution, how much of our revenue that we do is from, let's say, D2C and e-commerce, and how big of a after sales service market is there? I'm assuming that the margins would be higher in the after sales service. Is that correct? Or how do you look at that? Simply because watches by definition is also a luxury product, so I'm assuming the margins would also be higher to start with. Maybe can you help us explain those revenue segments and the margin profile in each?
So so you want all the trade secrets. Okay.
I
Let me
would
share
kind
that
of
with you.
also put it on my audience that they wanted more than me.
No, by all means, by all means, by all means. Let me answer it in this way that B2B, from the revenues point of view, is the largest share, lion's share. But from the profitability point of view, it is after sales service support. Yes. And that is the reason, on one hand, we want to expand using the new expanded families, share of money in our company to the retail footprint. Secondly, from our internal accrual, we have already started the expansion of our service centers. Like, for instance, 3 months ago, we opened a service center in Mumbai where we could actually service the watches owned by the Swiss, so-called the Swiss group, and give them a utmost experience. They can use it from our watches, from the brands. So, and it's already, I think this month we should be breaking even. So in the third month itself, we should be breaking even. It's one of the most expensive space, which is at on Turner Road, Bandra. So you can understand how expensive that space would be. So, and we are going to expand. For that, there's another joint venture with the same partner, same listed company, and we are going to expand the scope of service centers across India. So we definitely see service center as a important aspect of going forward in terms of profitability, has a higher share of profit margins, but you have to understand that it is also extremely difficult to have a service center of that magnitude. Reason is simple. The trained manpower is very short. The new youth is not willingly coming to the segment because of lack of knowledge, as well as maybe the intent, because maybe they get attracted more towards the other side of the business rather than hardcore, labor. So the technical aspect. So that we are trying to solve through our internal systems. But I'm just trying to answer your question. So if you were to say, I would say B2B is the mega in terms of revenue. And because of B2B, I get to service the clients on, through the e-commerce. Then I get to service the clients through my after sales service. So they all are interlinked. And lastly, of course, we are also the exclusive distributors for tools and machinery, which are the world leaders in the market share, Burgio and Horotech. So technically, any service center would use these tools, and they can only buy from us.
Understood, sir. And can you also zoom in a bit on I was seeing there was some revenue coming in from the PR and the advertisement segment as well. Can you talk a bit more about
Yes.
what that
Yes.
revenue is from?
Uh, as I said earlier, that marketing is very close to me. I grew up in the marketing scenarios and building the brands. That's also one of the reason why the brands trust us. So both our existing distributed brands, they've given us the responsibility of doing the PR, marketing, uh, and it was also recognized by outside of our brand folio, which is another luxury brand called Chopard. So they also switched over from their previous associates to us last year, and which contributes quite a lot. So our expertise remain, and it's only growing, and we want to continue with that because that's where our creative juices keep flowing. It
Understood, sir.
keeps us grounded.
Yeah, understood. I have fairly established now that it's a smallish industry and you're doing fairly well in that small industry. Maybe one question which I feel is a risk factor is that 90% of our all our revenue in the B2B distribution side is coming from one client tag. Heuer. Can you
Correct.
help us
Correct.
explain to our viewers like what how long is the relationship? When do they renew? Can they probably choose another vendor? And probably also zoom in a bit on the, when you started, you said that you were doing a lot of cleanup on tech. You were maybe help us set it up that they will probably not, like, there's a reason why they'll continue with you per se.
Uh, See, first of all, I strongly believe that nobody wants to change unless and until something is broken. So something is not working for them, then only they will look for an alternative. So my current contract is definitely on for the next 2 to 3 years time. In fact, till December 27. Okay, and it gets automatically renewed for another 5 years. That's usually the case. However, the company and the brand can come on themselves. That risk is always there. But logically speaking, it's unlikely because if I've been doing a good job, why would they change me? They can change me if they want to come on their own. The market is not that big when, if and when they could come back on their own. That was the principal reason why they closed down in 2015. So, and to change us to go with a different partner, a different format, highly unlikely because it's not that big a market. Yes, the growth rate is there, but the base is small. We are still, the competition is hot because for everyone the base is that it's not grown so much. There is a cumulative a CAGR of between 12 to 18% different for different brands, and for our brand is a lower one. And now that, because our focus had been that clean up, make it exclusive so that people can earn money out of it, out of the business, they stock more, they stock properly, and once that is done, move up the average selling price. So we followed a process. So we have been able to move when we took over for 1.4 lakhs of average selling price to almost touching 3 lakh rupees today. So when we expand now the expansion comes in. So when we expand now, of course, the business growth should be more, much more, but it's all logical. It's all logical. That's all in our planning. However, planning versus execution versus outcome are a things that needs to be seen. Government has been supportive. Government has been now they have signed the FTA also, so the custom duty comes down. The effect is almost 1.15% on the MRP, almost like that. So all the cost escalations that had been going up during the last few years gets kind of a compensated. So all I'm saying is the environment is improving. The retail environment is improving. If one were to see the let's do the cross category learning. If one were to see how the malls are growing, they are getting into tier two cities, they are getting into tier three cities because they understand that today's customer is changing. They want a dedicated space. They want an experience, and the brands are willing to give that. Partners are willing to invest in it. So I think the chain is complete. But to answer your question, company can change it. That risk is there for sure. However, it doesn't make a logical sense for them to change.
Understood. And for the next 2 years, we have the contract, right? December 27
Okay.
is when it will be up for renewal, right?
It's just automatic renewal unless
Got
until
it.
something changes.
Got it.
So we come to know about it, 6 months in advance.
Understood. That's helpful. And maybe since you mentioned that now tier two and tier three cities are coming up with their own malls, etc., and that's a good
Yep.
segue into your objects of the issue. Can you probably just explain your objects of the issue? I was seeing that you want to open your own retail stores. How would they work? What is the thinking behind that? If you could just walk us through that.
That's precisely the point I was saying, that since those are cities which are growing and they would want to have that experience that people see in metro. Like for instance, if let's say you are living in uh, Dehradun, for argument's sake, or let's say in Agra, okay, you will have your kinds of evenings, a corporate evening, but very few corporate evenings and of a different nature. Imagine the corporate evening of a metro market in that smaller city. The experience is different. The people that you relate to becomes different. I did a event for Hublot in 2017 in Indore. People still remember it. People still remember it. The partner still remembers it, that you did this for me. Okay, so they take it personally. It's fantastic. One of my partner who opened a store in Pune, he did that in Pune. The outcome was different. So I'm saying that it's not just enough to open a store just because there's a mall. People come in over there. Yes, of course you can do that. But going beyond making a relationship, that's what it counts. Because watches is not a considered purchase. It's an impulse purchase. You like it, you got to have it. The rational part is only the relationship. If you have a good relationship with your customer, you can talk to them on one-on-one basis rather than a salesperson versus a buyer. That's where the difference is. So you got to be knowledgeable, you got to be having an empathy, and you should be able to talk to them with an equal respect. Then only a relationship will be made and you'll see the difference. So
Understood.
I think the time has come in tier two cities and tier three cities for customers to experience it. It's been, in fact, long overdue. We're late.
Understood. One more question here. Since you also said that your listed peer is also your biggest a big customer, would he be also your competition here? And how would they look at that competition? I'm just trying to, because it's such an
That's a
interesting play.
That's a tricky question. Absolutely, we have been discussing internally, and on the outside, it may look like a clash of interest, clash of business interest, which may affect the business on ground. But the way we do the business is always work with our partners, not against them. We work towards complementing their businesses, so therefore the exact strategies will be still coming out because we are on paper working with them on that front. So there are various meetings happening, and chances are we will start opening in the places where they are not present first. Okay, but collaborate with them to expand the retail footprint. So it's much more collaborative rather than taking a corners.
Understood. That's helpful. Also, are you raising for working capital? What is the current inventory turnover like? Like, how many times are you able to? Because I'm assuming simply because these are impulse purchases and you need to hold on to a lot of stock, the inventory turnover would be rather low, right? Is that assumption correct? And how, like, do come brands require you to maintain certain inventory? How does that part of the business work?
There are policies, brand policies, where they would want us to present a certain range of products, okay, complete family, so that there's a consistency with the worldwide presentation. There is a inventory cost for sure, and there is a inventory size. Uh, so all put together, we have proposed that per store we would be having certain inventory, but more importantly, what we are targeting is that if we achieve the stock turn of 1.5 and above, we are into the black. So that's what we have to target. So when you work backwards from that, when you work backwards in terms of total investments and everything, certain numbers come per month. And when we map it vis-a-vis the market, we find that okay, this market can deliver it and can take it up to this price point. So therefore, so uh, our process is very flexible at this stage, and we will remain flexible to open a store depending upon the market, depending upon the capacity to take the price range, and therefore the number of brands will vary from 6 going up to 10 per store, so that we can focus and we can work back from the stock turn. So assuming a per brand a stock of 40 units, 40 units into eight brands, we are talking about 320 units. A stock turn of 320 units of 1.5 is almost 500 something. That means around 40 to 45 watches per month. That means one and a half
What
to
a
two
day.
watches per day.
Yeah.
So we need to look for markets like that and price point like that. So this is our game plan. As I was saying, I'm very hands-on. So therefore, we understand how things work on the ground level, and we have to work backwards rather than top-down approach. We have to work bottom up, and that's what we are good in.
Thank you. Thank you for explaining, generously explaining your calculations. That helps, that gives confidence to the audience. Maybe going to your numbers, I was seeing that your H1 26 is like 40% of the yearly business. Wanted to understand, is there a seasonality in the business? Like I'm assuming retail would shop more towards the second half of the year when you have, like let's say Diwali or a Christmas. Is that right? And how do you typically look at split of the business in first half of the year versus the second half?
Usually that is right. That is right. The second semester is always, or last 6 months is always better. Because of the weddings, because of the festivals, because of all the from the festival related to the sowing of the crops, to the reaping of the crops, to everything. Everything goes in that, including the bonuses from the company, etc. But in our case, we were targeting a good growth. In the first semester, we lost out a one big order from BCCI, because the previous year we had supplied to IPL for both WPL as well as the men's tournament. But they seem to have policy of not going to the same brand in a row, every year. So that's how it happened. So we lost that order, and that's the difference. Otherwise, the gain is much faster. However, uh, the revenue might have been lower, but the profits are good because we have grown in service center where the profit margin is higher. So I think we will achieve slightly more than last year.
Understood. That's helpful, sir. Maybe can you also explain to us what segment would you now be targeting towards? I understand you said that you would want to open these stores, etc. But what, like, let's say 5 years down the line, in the short term, we know the vision, but what is the vision of the management in the slightly longish term? Where do you feel you want to take the company towards? And then also, maybe end with what message would you want to leave with people who would want to come in the your journey right now, while because there's still a very small company which you have ambitions towards versus, so what you
Of
would want to
course,
leave
of
them with?
course. Uh, Let me answer that. See, long run is very, very clear. Long term vision. We have to aim at mono brand boutiques. Okay. But our goal will always remain open the boutiques in tier two and tier three cities, so that to give them experience and make our customers, make that relationship strong. So we are building relationship because we feel the time has come. The time has come for tier two cities and tier three cities, and that's where we are going to focus. We're going to remain like that. So, in the long run, we are looking at opening monobrand stores in bridge to luxury, not exactly luxury, because we feel that the propensity to buy would be more between 75,000 to 2 lakhs, 2,50,000 rupees. So that will be much more because we can focus more over there, and we can reach out, we can create our relationship much stronger in that price point. For the higher range, of course, there are brands already existing, and they will fulfilling it. And that's what I had mentioned, that we will not be fighting against our own customer. We will be actually working in a collaborative manner. So we will focus on a different range altogether.
Understood. And sir, any messages for your potential shareholders who would be joining your journey as IPO shareholders right now?
All I can say is welcome to the family, and I'm happy to share my time in developing the market and working in partnership with you. So happy on that front, and all I can say is time is the ultimate luxury. So timing is important, and that you see in your investments how important the timing is. People talk about shares, share market as the entry time, exit time, etc., etc. Nobody can time that, but I'm sure you must be doing it. You have your own formula. But in our case, in the luxury market, we are the second player getting into the listing. We are a small SME, as the category is called. But my message to you is the time is right. Get on with it.
Understood. That's helpful, sir. And maybe I would go back, zoom back, go back a step and ask you. I was seeing that the growth for the business has been fairly like smallish. The company has had a 50 to 60 CR top line for the last 3 years. Can you help us explain? And again, maybe I'm at the cost of repeating myself. What would be that trigger, and how do you feel the business will grow over the next 2, 3, 4 years? What trajectory do you see for the business?
Let me give you an example. Sorry, I'll have to give you the numbers because without that, that example will not be correctly demonstrated. I cleaned up the market. Now I have very select number of stores to service for the main brand Tag Heuer, for Zenith, for Hublot. Hublot, we are established. Now, Bangalore boutique is going to start turning around and delivering profits. Mumbai boutique took 2.5 years, then the COVID struck. Okay, but it's making profits. It's the number one store in India selling Hublot watches. So similarly, Zenith, we are correcting it. Tag Heuer, we have already corrected. Now is the time to expand. So just imagine, we so far we have been correcting it. So therefore, we are holding on to the revenue and increasing the profitability step by step in a smaller number. But imagine what happens when you expand. So
Understood.
we see an expansion of 30% in terms of our retail network. Of course, after initial selling, they should be able to sell more in the market. Then only the replenishment will happen, and it's the replenishment which is more important to us rather than selling in. So therefore, we are cautious in expanding, and but at the same time, the moment we expand at a higher average selling price, uh, it zooms. So we expect a good growth this year. I'm talking about 2026. At the same time, we also expect investment in retail, so which will kind of I would say I won't say it's a it will bring us down in the profitability. It's just that the investments will go flow somewhere else. But from the existing business, we will only grow. So the way to evaluate would be existing business and the future business. But more importantly, what I'm going to say is that, and this I want to add about it. I want to talk about it. Most of the time, you as an investor, you look at the existing company and invest in it. My existing company has been stable and profitable for a long time. I am suggesting and requesting you to look at the future plans and invest in it because the safety net of the existing company is always there. So it's not that it's an unsafe investment. It is a safe investment because I'm profitable and will have a complete expansion plan in terms of the existing business. It's the future, which is the retailing. That's where I'm asking you, requesting you to evaluate and invest in it. That's where the future lies.
Understood, sir. I wish you all the best for your IPO, and I wish you success with your retailing plans as well. As an investor, I can tell you retailing always tends to get a lot more multiple simply because you feel like people feel that it's more of a sticky business where you can continue to sell to your customers versus where when you're selling to B2B, it's slightly like it's always looked at like price is the biggest perception. So I wish you all the success for your retailing journey, and knowing your experience so far, I'm sure you'll do well, sir. Thank you so much for talking to us today. I would probably repeat for all my investors, the IPO for Luxury Time is open from 4th to 8th of December. Please go through the RHP of the company and make your own decision. We are not investment advisors. We only wanted to present a side of the company, and definitely take your decision only after consulting your financial advisor. Thank you so much for sir for talking to us today.
Thank you.